Happy Friday the 13th. Eric Bible with the Bible team at Neil Home Loans. And yes, another victory for mortgage rates this week. And I'll say the best victory of the year as the 30-year fix has just hit the lowest levels of the year and really the lowest level since February of 2023. As we kick off this Friday the 13th, the 30-year fix opens at 6.15%. That's down from last week's 6.35. And I know everyone's asking, the Fed is meeting next week, and yes, they're cutting rates. Does that mean mortgage rates are going lower? So that's what I want to take this update this Friday and really cover on to ensure that you can answer these questions to your clients and really proactively engage with your database to ensure you're the market expert and delivering that value. So let's dive into it. Yes, the Fed is meeting next week. And yes, I would say that this is one of the most anticipated Fed meetings in recent history. As we know, we've been in this cycle. The Fed last hiked in July of 2023, and we've been eagerly anticipating this moment. And yes, long term, I do believe as we enter and really chart course through this new monetary policy, new cutting cycle, mortgage rates will be lower. But the question becomes, as I know a lot of your clients, I know my clients, they're calling and saying, Eric, we want to pause, wait, make a decision, whatever it is, because we hear the Fed's cutting next week and we think rates are going to go lower. So let's pull up and talk through this. I've included in our newsletter this week what Fed rate cuts going back to 1990, early 90s, what the start and anticipation into the first Fed cut, and what happened with mortgage rates up through current cycle. So let's back up here. Mortgage interest rates, as I opened with, are at the best levels of the year, best levels really of this cycle, going back February 2023. And let's keep in mind, the Fed has done nothing. Their last move on rates was July of 2023, yet mortgage rates have dropped to the best levels. Explain that. And it all comes down to what the market expects. Yes, we know the Fed is going to cut next week. That's not a question. That's no longer a question. The big question is by how much. And these moves in mortgage rates have come solely on the backs of anticipation, guessing what the Fed's going to do next. And based on how the market has responded on just rumors to this point, there is a strong possibility we could see some mortgage rate deterioration. Now, I'm not saying rates are going to go higher. As I've mentioned in previous weeks past, my crystal ball is absolutely broken, and I really hope I'm wrong. But looking at history, and I believe, yes, this cycle is different given COVID, how fast things have materialized, what's happening in other aspects of the economy. But history is our best reference point. It's something where we can really accurately look into the future to provide quantifiable advice to our clients. And what we're seeing right now, and the velocity of which interest rates, mortgage rates have fallen with no action on behalf of the Fed. If the Fed doesn't deliver what the market is expecting, which really the market wants a 0.5% cut on the Fed funds rate, and it looks like we're only going to get a quarter. If that is the case, I would not be doing my job correctly in advising and guiding my referral partners, my clients, that there is a possibility we could see mortgage rates deteriorate in short term. And if we add in the aspect of presidential election later this year, the economy doing what it's doing, as well as globally what's happening, I would be failing you. So what can we do with this information now? Yes, rates are at the best levels we've seen in over a year and a half. This is the opportunity to engage with your database, engage with your clients, because we know the media is going to paint a completely different picture. Hey, the Fed cut rates, you're going to get the call. Mortgage rates are lower. Well, they may not be. So being able to have these talking points with your clients in advance of that information, you look like the pro. As always, if you need help or guidance in how to have this conversation, frame this conversation, know we're available. We'd love the opportunity to assist. Now, as we close this down, as we know, and as I expect, yes, mortgage rates are on their descent. We are now entering into a declining rate environment. Yes, and much like we've seen over the last 2 years, volatility will become a norm. We will see rates go up. We'll see rates come down. I do, again, very firmly expect we will see lower rates as the year unwinds and as we enter the new year. But until we have clarity from the Fed on how the cutting cycle will unfold, it's all speculation at this point. So prepare ourselves. I hope I'm wrong. And we'll bring you that information next week. As always, make it a fantastic Friday and an even greater weekend. Thank you.